In Hamilton real estate, the springtime usually means a lot of sales. For sale signs vanish overnight and buyers have barely any time to think. But this time around, things are a little bit different. In April, we saw the market pumping the brakes. Inventory surged while sales slowed. We're seeing a lot of buyers now pausing their search, and we're seeing a lot of sellers starting to panic as the showings are going down on their listings. If you're thinking of buying or selling in Hamilton at any point in the near future, this video is going to break down the numbers so you know exactly how to plan your next best move. My name is Steve Lopresti. I'm a real estate agent in Hamilton, Ontario, and if you have any questions at all about your next move, you can always reach out to me. My contact info is up on the screen there. So the numbers are in, and they're not quite what people were expecting. Hamilton recorded about 511 sales last month. That number is down 20.4% compared to April of 2024, and it's also about 36% down from the seasonal average. Meanwhile, the new listings went up to 1,287, and that brought the total amount of active listings currently on the market to 2,126. That brings the months of supply to about 4.2 months, which, if you're not familiar, that's just the amount of time it would take for all the listings on the market to sell if no new ones came on. So we're currently at about 4.2 months. Homes are also sitting longer on the market, with the average days on market coming to about 34 days. The benchmark price has also dropped to $733,000, which is down about 6% from this time last year. The average price has also followed suit, which is about $791,000 in Hamilton. So you might be wondering what happened to all the buyers since all these homes are sitting on the market and they're not selling. They haven't gone anywhere, they're just waiting. There's a lot of uncertainty right now and nobody really knows what's going on, so everybody's deciding to just kind of wait and see what happens. This momentary hesitation, however, is where the opportunities get created. Less competition means less pressure. So if you're a buyer who's been trying to get into the market for a while, now's the time. More listings on the market means more choices for you. Less buyers out there looking means less competition. So the chances of you finding something that you actually like at a good price and not having to outbid 30 other buyers for it are very, very high right now. I mean, I don't know if you want my opinion or not. I mean, you're watching this YouTube video, so maybe you do. But I would take this opportunity while you have it. While everybody else is sitting on the sidelines waiting to see what happens, you can be out there grabbing deals. And what's your alternative, really? You could wait until confidence levels start rising again, but then everybody else is going to go out there and start looking for houses again, which means it's going to drive up competition, which means it's going to drive up prices. And don't forget about the bidding wars. So sellers who priced their home based on outdated comparables are getting a massive wake-up call. Showings have dropped across the board, lowball offers are back, and the MLS is just a graveyard for unsold listings, expired, and terminated listings. The ones that are actually selling are readjusting quickly and pivoting their pricing strategy according to what the market is demanding. And we are still seeing some well-prepared homes selling quickly and getting multiple offers, so that is not entirely unheard of in this market, especially in places like Dundas, parts of Westdale, and Stony Creek. Now, not every area is reacting the same way. Hamilton's a bit of a mixed bag right now. Dundas in particular surprised everyone with a 48% increase in sales volume. The prices there held firm, which is likely driven by a demand for quality houses in an established neighborhood with good walkability, good shops, and so on. Ancaster also saw a big jump with its median sale price going up over 17%. However, the amount of sales still dropped, which hints that this is probably a few outlier sales that were of a higher price point and probably more luxury buyers in that area. Now, the Hamilton Mountain and Hamilton Center have both cooled off. The amount of homes for sale are really starting to pile up in those areas, which is why those have the best opportunity, and that's where you have the most negotiating leverage if you want to buy a house in those areas. Different segments of the market and different property types are reacting differently to this, with condos being hit the hardest. Sales are down over 24% for condos. Prices dropped by nearly 7%, and with 7.5 months of supply with condos, this market is clearly tilted towards buyers. There's a lot of investors who are trying to offload units that they bought, especially new builds. So there's a great opportunity here if you're a buyer and you've been thinking of getting into the market. Maybe you can't get into those nicer detached homes, but you want to start off with something smaller like a condo. There's a great opportunity here for you to get in there, grab one of these units at a great price. Semi-detached houses have also seen about a 37% drop compared to last year. Now, detached homes still seem to be doing fairly well in terms of the volume of sales, but even that is starting to cool off as well. Months of supply for detached homes just crossed 4. So the trend is pretty clear by now. Sellers are no longer calling the shots. All right, now it's time to talk about the elephant in the room. We now have a new government, or the same government. I don't know. The Liberals won again. Now, I know some people who are thrilled and some people who are devastated by this news, but regardless of who you voted for, This is what the situation is, and the best we can do is just analyze what's happening and figure out how to best plan our next move. The Liberals are already talking about some big changes. So, one of the things that they proposed was the GST exemption on new builds or substantially renovated homes that are priced at under $1 million. Now, this is aimed strictly at first time buyers. This could result in thousands or tens of thousands of dollars in potential savings, but this isn't set in stone yet, so as of right now, it's just talk. They also announced $25 billion with a B in prefab housing and $10 billion in additional affordability focused development. If that ends up materializing, we could see quite a bit more supply over the next few years. Now, another interesting policy that they've introduced is the multiple unit residential building tax incentive. It's a bit of a mouthful, MURB for short. And that basically just incentivizes people to build more rental units, which puts more of a supply of rental units out on the marketplace. And offering more rental units will ease some of the pressure on the housing market. But again, these are just announcements. Who knows when or if these are even going to come to fruition. So don't wait around for this to happen. You want to still take advantage of the opportunity we have right now, which is tons of listings on the market today and great deals to be had today. Speaking of rentals, rental vacancy is creeping upwards, especially in those small entry-level one-bedroom units. Rents haven't really started dropping, but they've also stopped rising too, which for investors is a big red flag. Now, for buyers, on the other hand, this opens the door to potentially negotiating with some of these landlords who are trying to offload these units. We're seeing a big increase in the amount of tenanted properties that are hitting the MLS, which means landlords are trying to offload their investment properties. This makes the market more accessible to first-time home buyers who are trying to get in. If you're a buyer, you've probably been watching the market like a hawk, but everything feels either overpriced or too risky. So here's your game plan. The first thing you want to do is focus on listings that have been on the market for over 30 days. These sellers are already tired of the process and they're already been warmed up to negotiating with you. The ones that have been on the market for only 3 days are still hopeful and they're probably, let's be honest, a little overpriced. So go for the ones that have been sitting on the market for a while. They're going to be a lot more reasonable. Don't make the classic mistake of assuming just because something's been on the market for a long period of time that there's something wrong with it. Most of the time, the reason why they sit for a long time is just because the seller is overpriced. The second thing is to prioritize properties that are vacant or investor owned. Vacant properties indicate that the seller already bought something else or they've already moved out and that home is not being used, which means it's a massive liability for them. This would signal that they want to sell it as quickly as possible, which means they'd be more likely to accept a lower price. And the same thing with an investor-owned property. They're also probably trying to cash out so that they can take their funds elsewhere. The third thing you're going to want to do is make sure you're looking past surface level issues when you're looking at a house. An outdated kitchen or an old paint job can all be redone and you can save tens of thousands of dollars if you look past that and decide to just buy something and you'll fix it up later yourself. Make sure that you line up your pre-approval, your lawyer, and your inspector in advance. If a great deal appears, you're going to want to move quickly. You won't have time to waste going around trying to set all this stuff up if something is right in front of you. The fifth thing that you want to do is to write offers with strong negotiating leverage. Short conditional periods, strong deposits, reasonable closing dates, that sort of thing. If you do all that, the chances of you finding a house you actually like at a good price are very, very high. But you have to be ready to act so that when something does pop up, you're prepared and you're not scrambling. Okay, all of this being said, if you're a seller, don't lose hope. This isn't 2020 anymore, but it's also not 2008 either. The demand for homes in Hamilton hasn't vanished, it's just become more selective. Sellers who accept reality and adapt quickly are still finding success. This means pricing to today's market conditions, not yesterday's. It does not matter what you paid for your house or what you want to get for it, it matters what somebody else is willing to pay for it. And right now, buyers who are out there looking have a ton of options. So if you want your home to actually sell and get the best price that you can in today's market, you have to be realistic with your pricing. If you're not, you end up losing more money in the long run. You also want to make sure you're getting high quality video that sells the actual value of the house. And you want to make sure you're using targeted marketing that reaches not only just a bunch of people, but the right buyers. Putting your house up on the MLS and praying for the best is not a good strategy in this market. So if you're interested in hearing about how my team and I are actually selling houses for faster and for more money in this market, then you can always reach out to me. My contact info is down in the description. Another interesting thing that is benefiting the Hamilton market is the migration patterns. So we're seeing a lot of people from Ontario moving outward to Alberta, New Brunswick, and other Canadian provinces, but Hamilton is still benefiting from outflows from the GTA. A lot of people are priced out of those markets just because they're so high, so they're moving to Hamilton because Hamilton still remains somewhat reasonable. I know somewhat reasonable might be a little bit subjective, but you know what I'm saying. Compared to Toronto, it is. A lot of the people leaving Toronto aren't leaving the province, they're coming to places like Hamilton because of the relative discount and a lifestyle upgrade. And the growth of hybrid work has made it even easier. Commuters who used to dread the GO train ride now only have to make the trip once or twice a week. So that keeps Hamilton in play for professionals who want space and who want to build families but also still want to have career access. Another thing to note is that short-term slowdowns don't erase long-term value. Hamilton's economy and infrastructure is diversifying and growing, and its post-secondary institutions continue to bring a steady stream of talent and energy into the city. Major investments in healthcare, education, transit, and waterfront developments are already in motion. So if you're thinking 5 to 10 years ahead, this month's dip won't really mean anything. If you're buying to build your life and not just to flip something in the next 6 months, you're still looking at one of the best value urban markets in the country. Real estate in 2025 isn't about luck. If you're sitting around waiting for some perfect signal to jump in, you're going to miss the window. The market is shifting in real time. Prices are down and inventory is up. Sellers are finally bending, which means this is your moment to take action. I know I sound like a little bit of a broken record at this point, but buyers who act now are locking up homes with this negotiation power. You don't need to be reckless. It's smart to do your research, which you're doing right now by watching this video, but also don't be passive either. So if you want some more information about how to buy a house in Hamilton, reach out to me for my free first-time homebuyer survival guide. It'll just walk you through the entire process of buying a home start to finish so that you know exactly what to expect, what to do, and what mistakes to avoid. Or if you just want to skip all that, you can book a free buyer consultation with me. We'll sit down, we'll go over your exact situation, we'll come up with a tailored game plan for you. All right, if you liked this video and you found some value here, don't forget to like and subscribe so that I can keep putting out more videos like this. Thank you so much for watching. I'll see you in the next one.